Roger, settle this for us. Was it hawkish? Was it dovish? The fact that they're going to buy bonds on the short end, does that have the same impact as just a deeper cut?
No, I think they're trying to avoid seeing the message that the buying bonds on the short end had anything to do with monetary policy. Was it hawkish? Was it dovish? I would have to say it was distinctly undecided. As you point out, there were 3 dissents, 1 in favor of more reductions, 2 in favor of holding. And the so-called SEP, the dot plot, showed also, a pretty divided organization. What was most interesting, to me at least, was Powell saying we are at a wait-and-see moment, which tells me they're still data dependent. And so I think the market should be focused on the incoming data, which I think will be guiding the Fed as opposed to a predetermined path right now.
Sometimes we use the word division or dissension when we're talking about the Fed, but it's just differences in opinion. Is that a bad thing? I mean, shouldn't the governors have different thoughts about the economy based on the data that they're looking at and also from the perspective that they're coming from?
No, absolutely. I think Chair Powell was very clear about it. One of the reporters asked in the press conference whether or not this was bad for the Fed, and I gave the appropriate answer. What he said was, it is a very tough call. We have very smart policymakers. The data itself are a bit ambiguous at this stage. So I would have expected a thoughtful group to have different points of view and to be comfortable saying that in public.
What was your take on the summary of economic projections? I've talked to some people that say, well, it doesn't matter because the Fed's going to change dramatically next year with a new chair, potentially a couple new members, depends if Jay Powell stays or goes, things like that. When you're looking at the summary of economic projections, is it something that you're really tethering your expectations to, or do you see a dramatic change going forward?
I'm not tethering my expectations to it, in part because it is ambiguous in 3 different ways. First, it's not really a forecast. It is a series of statements as to if certain things unfold in the economy, this is the way a particular policymaker would expect things to change in terms of policy. Secondly, as you point out, it's not clear who the voters were out of that set. And it's only the voters that ultimately do matter. And the third thing that's really important here is there wasn't a strong consensus about the possibility of 1 cut next year. There were 7 clear voters saying, or clear participants saying, no move whatsoever. So I would take it as expectations as of today, not a commitment, not a promise, and not a forecast. Let's wait until the data come in. And as Powell said, wait and see.
All right. Wait and see is an interesting term right here, because what did you make of his comments about AI and also tariffs? He seemed to kind of say have a wait and see approach when it came to 2 things that are really driving big parts of the economy. When it comes to tariffs, he seems to think that the effect is lessening. I heard a lot of other people see it just the opposite way. They believe the effect's going to pick up as we go into next year. And on AI, seeming non-committal about the possible impact on the job market, saying, well, yeah, you're hearing about layoffs, but at the same time, you're seeing opening. So what would you take about those 2 things? It seems like he's had a wait-and-see approach to both of them, and they're just 2 very big things.
Well, one, there are 2 very big things. Secondly, I think he has a point of view that the likely path towards tariffs, while it's still uncertain, is perhaps less feed through to inflation. That is one of the things that I think is dividing the board and dividing the FOMC. I think that everyone agrees with that. He made a very interesting comment on the SEP and what it means for AI. And basically he said, look, we may be at the beginning of a productivity improvement, maybe even a productivity boom. We didn't use those words because of AI. So I think they're open to the fact that they'll learn more about the impact of AI on the macroeconomic outlook, potentially mirroring what happened in the 90s when we had a productivity boom and the Fed came to understand that, and it was reflected in monetary policy. So I would say the wait and see was not indifference. It was literally eyes open. We'll assess the data as we get it, and open to the possibility that AI will be a productivity enhancer. And I think he's sort of hoping that the worst of the tariffs is behind him, but only time will tell.
All right. The Fed had been flying somewhat blind. The data they have is a little bit delayed. More data is going to come up, obviously, that's going to be more current. Right now, as we stand, they see 1 cut next year, 1 in 2027. Do you see that dramatically changing with upcoming jobs reports, inflation reports? I know you don't have a crystal ball, but just based on the trends that you're watching.
And based on the trends that I'm watching, I think the labor market will continue to weaken somewhat. They clearly hope that at neutral, where they think they are now, that there won't be a much more dramatic weakening in the labor market. So I do think if we see 2 ticks up in unemployment to 4.6, 4.7, something in that range. I think that will give them ammunition for a cut. And if inflation continues to come down, I think that would be very, very hopeful for them. So at this stage, I wouldn't say they've committed to anything, but as I listen to it, I think the lean is towards let's make sure that unemployment doesn't get worse, as opposed to trying to manage the likely impact of tariffs. So that's the way I was reading what I heard yesterday.